Okay, hello. All right, everybody. Perfect. Okay. Hello, everybody. My name's Justin, Business Development Manager here at Fullerton Markets, bringing to you a special class on candlestick patterns and what are some winning patterns that you guys can use in your trading. Okay, so let's jump right into it. All right, what are candlestick patterns? Well, candlestick patterns are movements in prices shown in the candlestick charts on the MT4. All right, they form patterns of whatever it is you're trading, and they might give you some clues, insights as to where the market could be going. All right, what trend or what direction the market could possibly take. All right, now candlesticks have been around for a very long time. Okay, they've been around since the 18th century, all the way back in Japan. All right, you might be wondering how. Well, before there were a lot of rice merchants, all right, back in Japan, and to monitor the day-to-day prices of rice, they employed the use of candlesticks. And through this method, they found they can more or less tell whether or not the prices of rice will go down or the prices will go up, and then they would act accordingly. So the Japanese have been doing this for hundreds of years before before it actually came to the Western world and ultimately to the rest of the world. Okay, so the Japanese started the candlestick patterns, and today a lot of people use it. If you've ever seen some papers written on any forex pair, you might come across a few terms: Doji, bearish engulfing, stuff like this. There's a morning star pattern, evening star pattern. These things are being used, all right? However, I must let you know that it takes time to understand and interpret each and every pattern, okay? And through the class we are having today, I will be showing you how we can interpret some of them, all right? Clear so far? Okay. So the first pattern that I would like to show you guys is known as the Doji, all right? You guys may have heard of this before, all right? It's one candlestick, which the opening and closing price are very close to each other, if not directly on top of each other. Yes, I'll say that one more time. Imagine a candlestick, all right? It goes up, it goes down, but ultimately it ends where it started, or even very, very close, all right? Not enough for us to say that it's, for example, a candlestick, but just a very thin line, all right? That is also acceptable, all right? Now, what does a doji represent, all right? A doji represents that people cannot make up their minds, all right? The buyers and the sellers are at a stalemate. They cannot go up, they cannot go down, so they are settling in the middle, okay? Now, a few people use this to tell them that the market is, the market doesn't know where it wants to go yet. Other people have also interpreted this as perhaps the market is ready to reverse, okay? So keep your eyes peeled later. Later we'll be doing some charting. Keep your eyes peeled for any doji candles that you might see, all right? But just the doji is not enough, since there are some variations to doji, all right? We have two types. First, we have the gravestone doji, all right, where the open and the close price is towards the bottom, and we have the dragonfly doji where the price is at the top, okay? It doesn't matter whichever one you see, they mean the same thing, okay? They mean the same thing. They just have a different look, all right? They still both mean that the market is indecisive, because as you can see, prices did go up, prices did go down, but it ultimately ended, the candle ended where it started. So that still tells you that people are a bit undecided, okay? So this is the first thing that I want you guys to take note of: the gravestone doji and the dragonfly doji, or even just, the regular doji where it's neither gravestone or dragonfly, okay? They basically mean the same thing, all right? So that's the first one. Now let's move on to a few more patterns that will help you guys, all right? So in the MT4, all right, we have already, highlighted a few doji candles for you guys, all right? This is USD-JP1 on the hourly time frame. As you can see here, the first doji, all right, this is neither a gravestone or a dragonfly doji. It ended right in the middle, meaning the market still does not know where it wants to go, all right? Just this is not enough to tell you where the market will go, correct? We always have to look at the candle next to it, okay? Now, this candle, all right, this candle represents something that we will be tackling later, and it does represent a bearish signal or the mark of a downtrend, all right? But keep the shape of the symbol in mind, all right? Now, the second doji down here, okay? All right, this is a gravestone doji. And as you can see, it's still not enough to tell you where the market will be going, okay? However, the candle next to it is very significant, okay? Later on, you will find out what this candle means. And lastly, we have a dragonfly doji here, okay? So you see them a lot, right, guys? You honestly see them a lot. But you may not have known what they actually meant, all right? So they will show up, and the lower the time frame that you guys are using, the more often you will be seeing dojis, all right? The higher time frames, dojis do appear, but are much more seldom than lower time frames, okay? Moving on, I would like to talk about something known as the hammer, all right? It's a type of bullish reversal candlestick, meaning, all right? Meaning when you see this hammer, it indicates that the market will turn bullish, all right? Now, the reason why it says reversal is because you have to find this in a downtrend, okay? When you're looking at your chart and you see prices are like this, moving down, and then you see a hammer, that could indicate that the prices are going up, all right? But what does the hammer look like, all right? It has a long lower tail below the candle, very small, and a short body, very short body, and and little or no upper tail, all right? Imagine what a hammer looks like, okay? Just imagine for a quick second, because I will be showing you guys what it looks like after, all right? When we trade the hammer, there's one thing that we have to take into consideration, all right? It's that the next candle immediately after the hammer has to confirm the bullish signal by being a bullish candle, okay? Remember that. The candle after the hammer has to confirm the bullish trend by being a bullish candle, okay? So ladies and gentlemen, this is what the hammer looks like, all right? Little to no upper tail, small body, and a long lower tail, all right? Okay, some people refer to the top as the wick and the bottom the tail, all right? So if you want to say it that way, a very small wick and a small body and a long tail, all right? This has to be found after a downtrend because it signals a reverse in the trend and that prices will be climbing higher. If the next candle directly after this is a bullish candle, all right? Keep that in mind. So this is the hammer. All right, here are a few hammers to show you guys, all right? A few hammers to show you guys. You will see these, all right? But do take note that the candles after these did not end as a bullish candle, all right? So even though the hammer was formed, we might not have taken this trade simply because the next candle did not indicate that it was bullish, okay? If you move on to the right a bit, you'll see that this happens again, okay? Later on, I'll be showing you guys some examples of when to actually use the hammer, okay? Next, we have something known as the hanging man, all right? It's a type of bearish reversal candlestick pattern, all right? Bearish meaning it indicates that the prices will be going down, okay? Reversal because you will find this in an uptrend, Okay, when prices are climbing higher, you find a hanging man, then you know that the prices could shift and go down. Okay, it has a long lower tail and a short body, and the wick is very small or there is none at all. Now you might be wondering, why does this sound so much like the hammer? It's because they are the same pattern, except, friends, except where they are located, okay? If it was an uptrend and you see this formation, you don't call this a hammer. You call this a hanging man, all right? If you are in a downtrend and you see this pattern, you don't call it a hanging man, you call it the hammer, okay? And just like the hammer, the hanging man needs the next candle to be a bearish candle, okay? All right, guys? So they might, they are the same. They look alike. Fundamentally, they're not different, all right? Except for where they are found, all right? And where they are found is what tells you whether or not it's a hammer, if it's a hangman, and where the price or where the market will go afterwards, okay? So keep that in mind. Same rules apply. Wait for the next candle to confirm the bias provided by the hammer or the hanging man, okay? You'll notice a lot of the other patterns are just like this, okay? So here are a few examples of the hanging man. As you can see, the first hanging man is coming off an uptrend, all right? After coming from an uptrend, we see a hanging man. It could indicate prices moving downwards, which they did, all right? But the next candle did not, immediately end as a bearish candle, all right? So you could have traded this or you could have not, all right? But the second candle, all right? As you can see on the left, there are 4 candles that moved upwards. That is an uptrend. We ended with a hanging man. And the next candle, friends, the next candle was a bearish candle, right? As you can see here, right? This candle is bearish. And true enough, prices did continue to fall down, all right? Now you might be wondering, well, how do I know when to get out? Let's not get ahead of ourselves, guys. I will be showing you later, okay? So we've tackled a few things. We had the doji, all right? We have the dojis, we had the hammer, the hanging man. There are a lot more, and I have a lot more in store for you guys, all right? I hope you're taking down notes, okay? Or you can just really doodle it quite fast, okay? All right, now there's something I'd like to share with you guys known as the inverted hammer, all right? This time, it's a type of bullish reversal candlestick pattern, all right, that is found in a downtrend, okay? It is found in a downtrend, all right? It flips the traditional hammer because this one, all right, has a long wick or upper tail, a short body, the same, but little to no lower tail, all right? If you guys recall, the hammer is the opposite of this, with a small or no wick, short body, and a long tail. This one is different. It has a long wick or long upper tail, small body, and almost no tail, all right? You find this in a downtrend, and it also tells you that there is a bullish reversal happening, all right? And all the same, the next candle has to tell you that, yes, indeed, it is bullish because the next candle has to be bullish as well, all right? Let me show you what that looks like, all right? Earlier, these were flipped or inverted, right? If you guys recall, this is what they look like. Little to no tail, small body, and a fairly large wick or upper tail, okay? This is an example of an inverted hammer, okay? This is an example of an inverted hammer. As you can see, the next candle, right? The next candle did not, the next candle did not end as a, the next candle did not end as a bearish candle, and at the same time, all right, that it did not end as a bearish candle. All right, so if you guys are wondering, if you guys are wondering when to use this, all right, all we have to do is keep an eye out on perhaps a higher time frame to give you guys some directions. All right, and I'm sure you guys have guessed that the next that I will show you is just like earlier, except we have a different name for it. All right, we call them the shooting star. All right, the shooting star represents a bearish reversal pattern. All right, generally it is found in an uptrend. All right, so prices are going up, and then you see a shooting star. So that's a small body, large wick, and almost no tail. All right, this indicates that prices will be going down. Okay, has a long upper tail, a short body, and no tail at all. All right, found in an uptrend. It looks just like the one we shared earlier, the inverted hammer, except where we find it is different. Okay, we find it in an uptrend. So the first one, as you can see, this first shooting star, we come from an uptrend, shooting star is formed. The next candle is a bear candle, a bearish candle, indicates that prices will be moving down, which they did. Here is another shooting star. The next candle is a bear candle, indicating that prices will move down once again. Okay, so far we've tackled dojis, hammers, hangman, inverted hammer, the shooting star, and there are a few more for you guys to look out for. All right, next we have something known as the bullish engulfing. All right, this is different from the first ones I showed you, because the first ones I showed you look at just one candle, right? Looks at one candle, while the bullish engulfing actually looks at two candles. All right, it is a two candle reversal pattern. All right, the second candle completely engulfs the real body of the first one, and it does not matter, and it does not really care for the length of the tail shadows. All right, now what do we mean by engulf? All right, meaning that it is larger, way larger than the first candle, as if it is blocking it. It's so much bigger, as if it could eat it, it could smother it, it could cover it. All right, so a few other words that could be used, that we could explain what engulf means. All right, basically large enough to cover the first candle. All right, this is what that looks like. On the left we have a bear candle, and on the right we have a bullish engulfing candle. Why? Because it is a bullish candle and the entire body is enough to cover the small body. It is way larger. All right, now it doesn't matter, it doesn't care about the wicks. All right, all it cares about is the body. All right, now what do these mean? All right, it means that the chart will be going higher, and we have more or less found an opportunity to enter a long position, since we are expecting prices to climb higher. All right, so if you look down here, this is euro dollar on the H4. As you can see, there is a small candle here, and the candle right after that is a very large bullish engulfing candle. Okay, bullish engulfing candle, because it is large enough to engulf this small candle, to cover it, to smother it. Okay, indicates that the market will turn bullish and prices will climb higher, and true enough, prices did. Okay, now opposite to the bullish engulfing is the bearish engulfing. All right, just like the earlier bullish engulfing candle, this one indicates that the prices will be going down. All right, the first one is a bull candle. The second one is a bear candle, which is large enough to cover the bull candle, indicating that the market will be going down, or a bearish pattern may form. All right, so here's an example on the USD JPY. Here we have a bullish candle and a bearish engulfing right after. All right, as you can see, it's almost more than twice of the bullish candle. It had indicated a downtrend. Okay, it had indicated a downtrend. I hope you guys are taking notes. All right, because after this we will be looking at a few more patterns. All right, so the bullish and the bearish engulfing pattern, ladies and gentlemen. All right, do take note that just using these patterns by themselves is not enough. All right, there are specific ways to use them together to create to create a very powerful trading system. Okay, so after the bearish engulfing candle, we have something known as the morning star. All right, the morning star is a pattern consisting of 3 candles that is interpreted as a bullish sign. All right, made up of a large bear candle, a small body candlestick, and a bull candle. All right, what does that look like? This is what that looks like. All right, we have a very large bear candle, a small candle, followed by a large bull candle. All right, the candle in the middle, it could be a bearish or bullish one. What we are looking at is the other two. All right, we need a bearish and a bullish one. All right, as you can see, ladies and gentlemen, here on the euro dollar, this was an earlier example of a bullish engulfing, correct? If you guys remember, this was the bullish engulfing that we had shown. However, it was actually a morning star pattern as well. How? All right, we had one large bear candle, a small candle, and a bullish candle. All right, this has now indicated that prices will be moving upwards. Okay, earlier we were just focused on the 2 candles. This one is a 3 candle one. Okay, clear so far? All right, now opposite of the morning star, we have the evening star. All right, it's a pattern consisting of 3 candlesticks that is interpreted as a bearish reversal sign, made up of a large bull candle, a small body candlestick, and a bear candle. This is what that looks like. All right, generally you can find this after an uptrend. All right, with the morning star after a downtrend. All right, here's an example of an evening star on the euro dollar. All right, first we have a large bullish candle, a small candle, and a large bearish candle. All right, which indicated that prices will be moving towards the downside. Okay, so we are now putting patterns together. All right, we can now look at the chart and see that there are some things that we have previously missed. The chart was trying to tell you where it was trying to go, but perhaps we did not know how. Okay, so so that's the evening star. I still have a few more for you guys. All right, don't worry. Moving on, we have something known as the 3 white soldiers. All right, this is a bullish candlestick pattern that appears at areas of low prices and suggests that prices will be moving higher. Okay, they suggest that prices are moving higher. What do 3 white soldiers look like? This is that. All right, 3 consecutive bullish candles. Okay, if you found this after a downtrend, my friends, if you found this after a downtrend, it could tell you that the people are done selling, the people are done shorting, and they are now ready to buy. All right, these 3 white soldiers could very well indicate that. Okay, now of course there is an opposite of this. If you guys have been following, if you guys have noticed from all of the other examples, there is always an inverted version. Okay, so here is a few examples of the 3 white soldiers. As you can see, from a downtrend, all right, from a downtrend, 3 white soldiers were formed, prices moved higher. All right, on the second one, after a downtrend, 3 white soldiers were formed and prices moved higher. Okay, you can also take a look at the candlestick after that. Okay, all right, So we have actually on the first one, we have formed, what do you guys call this? This is a hammer, all right? Remember, a hammer indicates that prices are gonna be moving higher, right? The one down here, the first one. Because prices moved down, a hammer was formed. This is a downtrend. A hammer was formed, meaning that prices will move higher if the next candle is bullish, all right? The next candle is bullish, right? If you entered a long position here, and then you found that 3 white soldiers were formed, you would continue to hold your trade until the market tells you otherwise, all right? That's just an example, all right? It's not complete, but that is an entry point for you, all right? Now on the right, we have another 3 white soldiers form, okay? So I've shared with you guys quite a lot of, patterns, how to interpret them, and pretty soon we will be putting them into practice, all right? But first, all right, let's talk about the inverse of the 3 white soldiers. We have the 3 black crows, all right? 3 black crows. They indicate a bearish candlestick pattern and suggest that prices may move lower in the next few candles, okay? So opposite of the 3 white soldiers, we have 3 black candles, all right? 3 black crows, okay? So here is an example of 3 black crows, okay? All right, so we see here there are 3 candles indicated that we could have taken a short here because prices could be moving lower, all right? All right, at the same time, this is also an evening star pattern. We have a large bullish candle, a small candle, and a large bearish candle right after an uptrend. So this could indicate that prices are moving down. And if you did take this trade and you found that a 3 black crows pattern was formed, you might want to hold on to your short position, all right? Here's another one. And prices continue to move lower and lower and lower, all right? Now, there are a lot to Japanese candlesticks, and there are many, many patterns, all right? I'm just sharing with you guys some of the most well-known and the really powerful candlestick patterns, all right? This isn't all of them. There are a few more patterns out there that you guys can study if you want to, all right? If you're very interested in candlestick patterns, go ahead and pursue further knowledge, all right? But what I'm sharing with you guys is more than enough to supplement your current trading, okay? So let's move on. There are 3 ways for you guys to trade with candlestick patterns, all right? The first is for using it as entry criteria, all right? If you have a breakout strategy, all right, look for 3 white soldiers and 3 black crows at the breakout to trade, okay? If, for example, you have a line and your strategy goes, if a candlestick passes here, I will enter a buy, all right? Just to give you guys an example, you might want to wait and see if the next 2 candles form 3 white soldiers, or if you're doing the inverse, 3 black crows, okay? These are more than enough to tell you that perhaps, this is a good position to buy, all right? This is a good time to buy. You can use any of these as your criteria for entry, all right? For example, if you were, just a few more, inverted hammer, for example, these are things that you guys can look out for. You can use them as your entry points, okay? Here is another one. Since the first one was through breakout strategy, this one is for trend strategies, all right? If you like trading with the trend and you like to hold your trades, all right, you might want to consider the bearish and the bullish engulfing, okay? Because they are, really early signs that tell you that prices will be moving higher or lower, okay? This could be much earlier than the 3 white soldiers or the 3 black crows, all right? Those are quite suited for breakout strategies, all right? Because they tell you that there's a lot of momentum for this breakout. Now you can also use the bearish engulfing, all right, if you are trading trends, all right, if you're using trend lines, all right. If you're using support and resistance, perhaps you might want to use the earlier one, the three the three white soldiers or the three black crows. But for trends, if you're using trend lines, let's try the bearish and bullish engulfing candles, all right. So this is the first way to trade using candlestick patterns as your criteria for entry, all right. They can also be your exit criteria, all right. You can exit your trade the moment an opposing candlestick pattern has been formed, all right. Earlier we had a bearish engulfing which made us short. Down the line, all right, let's take a look at the candles moving downwards, all right. Though there are bullish candles, right? There are bullish candles. We only really formed the bullish engulfing down here because there is a small candle and a large bullish candle, okay? So this could then tell you that, hey, maybe the trend is over. Maybe it is time for me to close my position and to, you know, perhaps enter with a long position. Okay, it can be used as your entry criteria, your exit criteria. You can use a few others, all right? For example, you see a doji at the end. You might want to hold, or you might want to close your trade because it could mean that prices will reverse, okay? Another example, if you see a morning star pattern down here, okay? Imagine seeing a morning star pattern down here. That is a large bear, small candle, and a large bull. It means prices will be moving higher. So if you are expecting prices to move higher, why should you hold on to your bearish candle? Close the trade, make money, prepare for the next trade, okay? So that's another way as the exit criteria, all right? Now, we can also use it as a standalone strategy, all right? You can combine candlesticks with you can combine candlesticks with things like trend lines or supports and resistances, or perhaps you might have some other indicators out there that can help you when you are trading, all right? So if you guys look down here, we have the support and the resistance, and we have three white soldiers, all right? Just based on the three white soldiers alone, we could want to enter a long position, all right? However, this three white soldiers was special because it actually broke through, all right? It actually broke through the resistance, giving us even more reason to enter the long position, okay? Giving us even more reason to enter a long position. It can be a standalone strategy, my friends, all right? It can. So here is one with a trend line, all right? You can, the same thing, you can still combine. This is a bearish engulfing candle, a bearish engulfing pattern. And you could sell here, but at the same time, you are trading very close to a trend line, meaning prices may not break through this anytime soon, all right? The moment the prices broke through, that is when you could have closed your trade. Just to give you guys an example, all right? Trading with candlesticks is very powerful, all right? If you know what you're looking for. Yes, it means more time looking at the charts, but at least you are getting more information, and more information will help you, all right? So, ladies and gentlemen, that is it for me. My name is Justin, Business Development Manager here at Fullerton Markets. I hope you guys enjoyed our class, and I look forward to seeing you all in our other classes. Thank you all, and goodbye.